Good afternoon, everyone. Thank you for spending your valuable time with the Adapt 2030 channel. Let's go back in time. If you remember 2008, you'll remember this. If you remember 1987, you'll remember this. It depends on how old you are and which cycle we're in. This is the ultimate cycle. Comparing times when money supply growth goes below zero, problems in the economy. WAMU, largest crash in 2008, Silicon Valley signature. That line needs to go way up to almost equivalent. Put it in perspective, it took 10 days for $16 billion to disappear in 2008. $42 billion in a single day this run. There's a new bank term funding program which will bail all depositors out. Of all U.S. banks, that's currently $19 trillion on top of the $30 trillion we already have. Bank Term Funding Program, BTFP, kind of like the TARP before, safe havens, gold, silver, platinum, palladium, Bitcoin, crypto, stablecoins not. UK stocks about to encounter the same thing. But what about the payrolls rippling through the non-payments of everything? Accounts receivable, QuickBooks, it's all stopped. Known companies to be impacted so far, I'm right on Etsy. Is that the first to limit our consumption? Because this contagion is going to stop all on-ramps and off-ramps of crypto. And once the CBDCs are mature enough in their tech, it'll be rolled out. Picture's worth 1,000 words, taking you back to the crash. 1930s, oh yeah, waiting at the door. There was no FDIC insurance program then. People arguing, give me my money back. It was kind of like that plexiglass thing there. You could have gone right around that, but just saying. Where the rubber meets the road on this one is the money supply. The growth of that, or the inverse, the contraction of it. Now you notice, we've never had a drop-off this steep ever before in what can consider banking history. Now, perhaps during the Roman era, it did in equivalency. But what we see here going back to, say, 1860, 1870, yeah, there was a drop-off in 1930, but it didn't start way up above 25% where we are, and that is a vertical straight down. There's nowhere on this chart that's even remotely close to how much has been lost on a vertical down. Food prices increasing. And it looks like less food available as we move through this planting and harvest season, Southern Hemisphere and Northern Hemisphere 2023. Hungry people are angry people. So I knew when I saw this First Republic Bank and I saw this tweet plunging 66.6%, I'm like, all right, there's the numerology, game on. You've seen a couple of 33s through here as well. So off a trading view, this is from Monday's session. Look at that, 78% down, Western Alliance. And it just reads like a red nightmare. As you move down the list of medium and regional banks, consolidation, shall we say. You just don't see something like this every day. You know, announcements of never-ending quantitative easing might take it all green. But to see something like this, you do need to go back in time, 2008 and 9 financial crisis. Regional banks is what you're going to focus on because the bigs, the too bigs to fail, they're taken care of. But all of these regional banks right there are probably going to get consolidated. And now a quick word from Patriot Gold Group. Have you kept up with the big headlines so far this year? Bank of America says that gold should be a mainstay investment for the next 3 years. Big banks and billionaires agree on two things. We're heading toward a recession and investors need to buy gold. The Patriot Gold Group is introducing the 2023 Recession Protection No Fee for Life IRA. Mention Adapt 2030, you're going to get the best in-class service from Patriots protecting Patriots. Patriot Gold Group has the No Fee for Life IRA where your 401k or IRA can be in physical gold or silver on qualifying rollovers. That's 888-546-7020 to reach out for your free investor guide today. Keep in mind, Patriot Gold Group is Consumer Affairs top-rated IRA gold dealer 6 years in a row. That's 888-546-7020. And now on with the video. Because if we do compare an apple to an apple on this, Silicon Valley Bank's customer withdrawals made history, $42 billion in a single day. That was on Thursday of last week. Started here about this Friday for those of you listening. 4.2 billion an hour. So the previous bank run, and that was Washington Mutual, also known as WAMU, 2008, total 16 billion over 10 days. Like, that's substantially different. But remember, online banking and wire transfer on the personal side was in its infancy. There was no Zelle. There was none of these other instant payment, Venmos, etc. And that's something to keep in mind, too, and the fact of the way moving forward. It's going to happen so much faster than 2008 and 9. I mean, the speed of money, the velocity of everything moving, it doesn't matter if it's into the investments or just the way our daily lives move, the sharing of information, the news feeds, how just quick it is comparatively to 15 years ago. So, they might say, well, it'll take to the end of the year, it'll take 2 years, whatever. We're talking days now instead of weeks or months for the same effect. And it's actually going to be exponential because just how much really money is in the system right now it dwarfs 2008 and 9. I mean, you think about half of all the money ever created, ever in the human history of humanity ever, has been in the last 12 to 15 years. So we're in a completely uncharted territory here. So keep that in mind with a couple of these numbers as we move through the rest of the video here. So we're going on to the visuals here. Market Watch already put the numbers together for us. WAMU was the largest single bank collapse, 307 billion. Silicon Valley Bank, 209 billion. And then you can see the year of the collapse. Like 1984, that bank contagion in 87 was a huge one as well. The dot-com collapse, if you were all around in the 90s for that one. But you can see the varying years, and it really, outside of those, top two, you're dealing with reasonable amounts of money comparatively in today's understanding of money. Billions. It doesn't seem so large like it did in 2008 and 9. So this is a good one off Reddit here. Data is beautiful. So again, that list that we just saw is every single one of the banks here with the larger circles. Anything in the really tiny circles around the periphery edge wouldn't even blink an eye today. It'd be like, all right, I got some pocket change. I'll bail that one out. But what you notice right away are the three largest circles. So between Silicon Valley and Signature, which is up in New York, collapse and bailout together, / saving all depositors, uninsured and insured, 319 billion, which is actually more than Washington Mutual, and this only occurred in 4 days? So where does it go from here is the question. So this line here is going to need to extend, courtesy of David at ADAPT 2030, up to the proper amount that we've lost, all in 3 business days compared to weeks and months in 2008 and 9. Really, I try to put this in perspective because of the speed this is going to happen as we move forward with pricing of gold, silver, crypto, securities, stocks, bonds, whatever it is. It's going to move ultra fast. So look at the deposit outflow duration. Wachovia Bank, Lehman, WAMU. We're talking weeks, days. From full capitalization to zero worth and collapse and taken over by the FDIC. 23 days, 16 days, 25 days, 1 month. This is what we were up against then, and it panicked and freaked the market, and suddenly there's all these changes, which didn't really seem to help, now did they? Because we're back at the same place again. So up at S3 Partners, top 15 most shorted regional banks currently. And that'll give you a glimpse of where you might sit, or if you're in one of these, they're being shorted at the moment. Huntington, I know that one from up in Ohio. Smaller lenders that got swallowed up by Truist, for example. SunTrust and BB&T got gobbled by that one. That was big news down here in the Southeast U.S., leaving them one of the largest in this sector of the country. So things could be more regional in the United States as well, depending on those types of regional lenders. But here's where it was. They had to sell some assets, and they were way underwater. Supposedly, the story goes, bond yields were better on treasury bills over here, and, it was just a mishmash of word salad. Again, you don't make money until you sell, or you don't lose money until you sell. So this is, if they were to sell, how much negative that would create in terms of equity in the banks. And we're looking at around, this is total U.S. here, off the FDIC themselves. $675 billion, nearly $1 trillion off of that, but then everything's leveraged out, 100x, 1000x. So what it turns out to be is the U.S. Department of the Treasury. Look at this press release here, March 12th, joint statement by the Department of the Treasury and the Federal Reserve and the FDIC. Rest assured it's all being taken care of. Don't even blink an eye. we got it covered. Look at the letter agencies and names. Basically what they said is we're going to cover everything for infinity of all depositors below 250,000 and above, which would have been lost and wiped out. So it's a backdoor quantitative easing bailout, in my opinion. A lot of people are saying the same thing, especially if you head over to Independent Economic News. Nouriel Roubini was talking about this. Daniela Cambone over at Stansberry Research. There's a whole bunch of people trying to put some pieces together with this. And the new program is going to be called the Bank Term Funding Program. Now, those of you around that remember 2008-9, it was the TARP program. So the U.S. bank total deposits currently that will be covered under the new program, they're going to cover everything. So put this in your mind here, 19.36 trillion will be covered, somehow magically printed. I don't know how it's going to occur. Nobody does. But they say that this is the total amount of covered assets now under protection in the United States. Full-on banking just was nationalized across the United States. There will be no more failures across any investments of any riskiness at all ever again until it fails again somehow down the road. 19 trillion will be added to the 30-some plus trillion that we have in the United States on the books as debt right now. Can you say one word? Hyperinflation. For those of you in Louisiana who were asking earlier. The financing will be made available through the creation of a new bank term funding program. BTFP, you know me. And they're going to offer up loans of up to 1 year for anything and everything. Savings associations, eligible depository institutions that are pledged to the U.S. And see, that's outside U.S. money that's being protected as well, which I won't even cover in this video. And it works a little something like this. Jim Rickards sums it up so well. I have a 15-year-old car with 221,000 miles on it. I'm hoping Jay Powell will accept it as collateral at par value, what I paid for it, instead of market value, zero. Worth a try. That's what they're doing right now. Everything that's underwater worth zero, they're going to not count it as zero, but the pre-value where it was valued before they would have to sell at a loss. So everything underwater is now above water and happily floating. There is no more Titanic. Federal Reserve is considering easing the terms of the bank's access to discount windows, meaning free cash, please put your hand out. That will let the banks turn assets that the banks have lost value into cash without losses, per Bloomberg, meaning from Bloomberg News Agency. This is an interesting one to think about here. So the banks that will have a loss can now take that same exact amount and ask the Fed, the Treasury, and everybody participating in this program for the cash equivalent of that loss. And in the books, it still is a zero. It's not a loss, because for that 1 year bridge loan, that is a net gain or zero asset, not even a loss. So this is where it's going to get really strange and unusual, and anything that would be, let's say, we'll use the same numbers here. $150 billion loss. It should be zero, and they'll ask for a $150 billion loan to carry over that so they won't have to sell those assets at a loss, i.e. treasury bills, things that have gone negative with the bond market, etc. Or are they going to still be able to value it at plus $150 billion and still keep that on the books and make it look like the banks are still fully capitalized, fully functional, even though they have absolutely zero value because they've needed to accept the bridge loan because all their assets are underwater and all their investments are underwater to the tunes of hundreds of billions, if not trillions of dollars. And somehow no taxpayer will be asked to bail this out, which means quantitative forever. It's going to be a hyperinflationary print. You can't put 19 trillion if everybody were to ask for the money at the same time. It's really literally impossible to put 19 trillion into the economy on top of the 30 plus trillion we already have as national debt and expect that there's not going to be inflation on everything. Everything. And there's bank runs going on across the planet as we speak. So you have to wonder, in tandem, are all these other, is the ECB going to do the same thing? There was massive record injections from China, which I'll cover in just a second here. So it all seems like everything is collapsing at the same time, but they're not going to let it collapse. They're going to consolidate and then at some point reissue that with the CBDC into the account holders, and that will be the bait and switch, or just a switch. I know, insane, isn't it? Oh, actually, I was wrong. It's right around 32 trillion, not 31. Okay, so add 19 trillion to 32 trillion. And what does that spell? Higher price food, higher price gas, higher price mortgages, higher priced everything. Can you afford it? Did your wages rise? Can we participate in the program? I have an underwater house. I haven't paid it off yet. Can I get the loan? Thank you very much, FDIC. Treasury, I will participate in my own program. So China ramping up cash injections to prevent funding stress, meaning bank collapse in China too. Wow, that overlaid on this. Amazamente, as they would say. It's inbound. Now, off Market Watch, these are the 10 banks that had similar issues. But now, with all of the guaranteed protection from the U.S. government nationalizing all banks, that really doesn't matter anymore. But if you were one of these banks, First Republic, that was the greatest hit. I guess they were down about 80% on Monday. But with all the bailouts, bail-ins, whatever you like to term it, it's just money going to flow in indefinitely to protect this so nothing collapses. House of Cards needs to be propped a little further up for just a smidgen longer. And off American Banker, this was a great article. The specific indictments. So you remember FTX collapse? They had FTX native token that was supposed to be pegged to $1. All these banks were receiving and doing business with FTX. You got Bank of America, Customers Bank, Silicon Valley Bank in yellow. Wow. Wells Fargo, Silvergate. Oh, they collapsed too, didn't they? JP Morgan in there. Now, I'm not saying go grab your money. YouTube. Senators asking, where you limit the reach of videos telling people the situation in the banking community? No, I'm not asking you to go or even saying go pull your money out. It's totally covered now. Wouldn't even do that. Totally covered. All banks in America have pretty much been nationalized. So you're good on your savings. You don't need to go get it. It's all good. For now. Today, what's it, Tuesday, the 14th of March. Current list of companies with Silicon Valley Bank deposits. Okay, Circle, 3.3 billion. That's why the Circle USDC token broke below $1. Roku, BlockFi, another on-road off-ramp for crypto. That's Payoneer, 20 million in there. See, these would have been complete losses except for $250,000 under the old rules, but we couldn't lose that much in California. In the tech industry, having that much money go bye-bye? No way. So taking a different train of thought than just purely lost monies or, indefinite, quantitative, backdoor easing, whatever. There's a million terms you could put for that. Companies known to be impacted so far. Now, Roku, great. If you can't stream, whatever. Etsy. Etsy is the canary in the coal mine for me here. So this is an online vendor where you buy and sell things just like Amazon. So is this the first of the beginnings of the lockdown of goods flowing across the planet that you could buy online versus going into a retail brick and mortar store? Just asking for a friend. Rocket Labs, startup space disclosed. Robolocks, they guarantee everybody this situation will have no impact on day-to-day operations of the company. I hear you. Calvary's coming to the rescue. But if we're over at QuickBooks, it's such a very different story, isn't it? Tens of thousands, hundreds of thousands of direct message or text messages, DMs coming in, asking, where's our payroll? Billcom's at risk. 200 to 300 apps in QuickBooks stopped functioning for money deposits and distributions. The bank accounts aren't functioning. Wire transfers aren't working. Direct deposit has locked up. What's going on there? So what is this really? Just some more consolidation of the banking system. So this will go from every single smaller and medium-sized regional lender will get gobbled by these four probably. These are the too big to fails. These are the same ones that survived right through the 2008 and 9 crash. So you could expect they're going to survive again. They're even bigger and even less prone to fail than they were back then 15 years ago. But they're going to gobble everything else up. Look how much gobbling has already occurred. But what were the safe havens during this time is the question. Well, gold, silver, platinum, palladium. Gold and silver have been used for money for how many thousands of years? Oh, yeah. Now, Bitcoin's screaming to the moon here. So I'm just saying that the next time this were to occur, that you're going to watch the same amount of safety plays going on. So keep your assets safe. You're going to move your cash into gold, silver, Bitcoin, crypto of sorts. Pax Gold. based on the price of gold, and it just skyrocketed as well. But the SEC is looking into Pax dollars, so I don't know how much further this will go down the road. Good for now. It's digitized gold. Now, staying on the crypto space here, USDC had circled unpegged for a little while. It dropped down to 94 cents. And then look who was the rescuers. It was nothing governmental-wise. Crypto's in its own space, so they relied on their own crypto cavalry to come in on this one. Coinbase depositing almost 2 billion USDC into Circle to try to push that back up to $1 stablecoin equal $1. Unknown institution, we wonder what that was, 222 million. Jump Trading and Falcon X all deposited into Circle to keep it from collapsing as well. So, big problems, aren't there? Which brings me to the well-known Operation Choke Point. This is an old one, actually, not even anything new. This is several years ago. I think it was 2019 the information from this one came out. So I'm just regurgitating 2019 information off Forbes magazine, I believe, covered this one. But today, as in March 13th, every bank regulator is calling every bank, asking for their liquidity report. As well they should. They're all going to be asking for money indefinitely. So will they apply for the new Fed program? And quick test of everybody's memories. What was the new Fed program? Bank Term Funding Program, BTFP. You know me. And whether they had any exposure to crypto, which brings me back to they're definitely trying to ensure that smaller banks don't touch the on-road off-ramp of crypto. Where are you going to go to exit your money if you're involved in crypto? Any firms involved in that? Yeah, the pond became almost just a dried up puddle, hasn't it? And for those of you unsure about Signature Bank, William Middlecope putting this one out here. Feds closed down a second crypto bank. Now, if you removed the competition, there would only be CBDCs possible left, now wouldn't there? So, I should say again, crypto banks, the two largest in the United States and financial behemoths across the world for, this institutional adoption of crypto just went down. Another consolidation? I think so. Like I said, the rest of the world needs to be taken into consideration as well. Look at the declarations of bankruptcies in the EU. I mean, that's skyrocketed in 22. What do you think is going to happen in 23? They still don't have natural gas. Everything's still shut down. Smelting, fertilizer production, you name it. It's still at minimal base levels at the minimum. There's really not much activity. And that's going to, everything you see there is just going to go vertical Loch Ness Monster through 2023 when we look back at it. And the UK 50 stock index, check that out. It was in some sort of tandem with a decline with the stock index and the indicators. But something broke. Now you got massive stock index valuation, but the indicators are still down to, you have a problem over there. Which is why I think we are going to need to return to this type of lifestyle. It looks like complex systems, supply chains are going to break down even further, more constrictions, less orders, less products sailing across the oceans, less products available across the internetscape. Get used to it because that's what's inbound. If you like this type of information, Ransom Godwin and myself talk about this every Thursday night, 10 p.m. to midnight on Rumble. Actually, we stream across 8 different platforms. You can find all those at libertylinks.io/solar minimum. Join us there. Others in the chat boards of like minds to compare ideas. And that's streaming from Revolution Radio. Also, TrueLeafMarket.com, heirloom and organic seeds for any grow zone on the planet. It is spring planting time, and if you are not thinking about growing your food, I'm sorry you wasted your time watching this video because it's going to be an essential cornerstone to your survival. Truly it is. I do thank you for watching. Hope you got something out of the video. We are going into the end phase. As we come through, remember, there's a few more things to happen. Thank you for sticking around to the end. Now, through my previous videos over the last 3 to 4 months of research I'm doing, there's going to be a massive ozone collapse in the southern hemisphere. Runaway ozone depletion event that will allow an enormous amount of UVB radiation to ground level and destroy even more crops. Now, this will occur August, September, October, November of this year coming up. You know, the Hunga Tonga eruption in last year in 2022, January. Largest watery vapor eruption ever recorded. Sent the most amount of water ever recorded up into the mesosphere. And it just so happens that ozone, the O3 molecule, breaks down on the ice crystal surfaces of these little tiny microcrystal ice formations up there. Chlorine and bromine are responsible for that. Now, the destruction of ozone is dependent on the amount of ice crystal surfaces for that chemical reaction to occur. We're not talking, 1,000 times more ice crystals are up there. They're talking like 100,000 times to millions of times more ice crystals in the mesosphere than normal. You got to think about there's going to be catastrophic runaway sea ice loss across Antarctica, in the continent's oceans surrounding the landmass. But at the same time, I'm not sure really how far coming back up toward the equator that is going to affect crops. Barley would be affected first. The Hungatonga eruption put so much water vapor, it added 10% more moisture and water vapor into our atmosphere in a single event, in a one-day event. So the atmospheric disruptions, the flows of, precipitation patterns are completely mixed up and discombobulated down in the southern hemisphere, reducing crop yields further. Now, yesterday's video that I did was talking about the Ukrainian fields, just how much damage there is out there. They are not going to be planting very much in Ukraine. Ongoing drought in the U.S. Now that might alleviate as we come into a neutral ENSO and maybe trend toward El Nino. The droughts and ongoing tumultuous growing conditions across Argentina has reduced all of Argentinian production 50%, 50 down. Australia as well, you're looking at 30% losses. So when we come into this harvest season of the southern hemisphere, it's going to make prices run away on the food side. And when we get into the real planting time, the fertilizer prices are going to be double to triple what they were last year. We just haven't gotten the natural gas back online to get the fertilizer facilities up and running so we can get our farm inputs. And that's going to be in addition to everything else that was going on. So I'm wondering, is one of these to mask and cover for the other one? Because I'm looking to say, all right, well, what's going to cause the food shortages or what's going to cause the food prices to spike? Organically, it would have played out the way it was going to play out anyway with runaway pricing. And then when we hit the ozone depletion event in August, and then in October of 2024, we have a magnetic anomaly that hasn't been seen since 79 AD. Yeah, 79 AD. We're about to go through another one of those in a year and a half from now, where the Earth is between the sun and the four gas giants interlooping, creating their own second torrid looping magnetic field. And we're going to interplay with two magnetic fields of some varying strength in the solar system here. And unknown what that will do to our planet, but you could expect rifts and breaks in the top mile of the crust of our planet, which means where the roads are, the railroads, pipelines, conduits, and these types of things that, facilitate our daily lives. And then 2025, once we come ripping around that, once the Earth's in front of the sun and everything else gravitationally is behind us, we're going to see an enormous amount of space debris come ripping through our atmosphere. It's going to get gravitationally tugged straight into the face of the Earth for about 4 months. That'll start to occur in April of 2025. So I could see why there might be some play in banking to put out a centralized system of tokens, otherwise known as CBDC, so there'll be some functioning economy as we go through these two natural events. I still don't like the control aspect of it. Don't like it at all. We'll be back with another video. Thanks for watching, and I do appreciate you spending your valuable time here. Hope this makes a little sense. It took me 4 or 5 days to get the slides together for you, so I hope it was worth your time to stay with me. Thanks. Bye for now.